Good afternoon, everybody. Welcome to the Trader Merlin Show. It is your Friday trading week wrap up. Whew, man, what a week. Not a good one for me. It was from the crypto side of things. It was definitely a bit of a bloodbath. But cheers to everyone out there. My long-term holdings certainly getting kicked in the teeth. Today's Angel's Envy is the beverage du jour. I hope you had a great week, and I hope Friday was good to you. All right, let me go to our graphic to start the show today. I wanted something that said, shows a bit of confusion in the financial markets. And I will say, it feels like there's a lot of confusion, and that confusion is leading to people not necessarily panic selling, but just unloading positions and just saying, no, I don't want to take anything home over the weekend, which kind of was to be expected. So let's dive into our markets. I'm going to go from the bottom to the top just to knock out our top 8 indexes to start. We've been talking about Bitcoin and how it looked bad. I'm going to put a vertical line on the November 3rd show. So here is November 3rd show, where, and just so we know what the price of Bitcoin was on that day when we did that show, so it would be at the bottom of this one. That's a green. What color is that candle? That's red. Okay, so Bitcoin was down here right around 107 on that day. That's where we closed out when I did the show, and the show was called Trouble Ahead for Crypto. And as we progressed, I kind of gave some theories and thoughts as to why I felt we would see more downside move in crypto, and lo and behold, now we're seeing more and more of it. A big factor was it broke this kind of several month demand zone right at 107, but then you had news of miners leaving the situation and moving more towards AI. That, of course, is going to have a big impact. You have long-term holders who are also looking at liquidating their Bitcoin portfolio. You have the retail investors who are now liquidating because they feel it's the 4-year cycle. And then you have this chart right here, which is one that I think most people will never look at because they just don't know that this exists. But this chart is showing you the leveraged positions, both long and short, for Bitcoin at this moment in time. And if you notice where we are at, this is actually as of right now. This is 95,299. Let me refresh this just to be sure this is current. It should be 95,299. Okay, so we're a little bit lower than that. The good news is, wow, I wish I could go back now and take a screenshot of that. I don't know if you guys caught that what just happened. When you look at this chart here, and I know some of you may not know what the heck you're looking at, but you're looking at a chart that shows on the blockchain leveraged positions. So the blue ones are 25 to 1 leverage. The I guess light blue or whatever color that is are 10 to 1 leverage. The orange are the ones that we're concerned with, right? The orange color there is 50, and then you have like a reddish, which is 100. You can see massive spikes of orange to the right of 95,060. That tells you there's a lot of people here shorting Bitcoin and using 100 to 1 leverage. Now, when it was, before I refreshed it, there were a lot more shorts that were closer to price. That's actually a really good sign because it means those people who were heavily leveraged short, pushing this thing down all day and for the last few days, have now backed off a little bit. It feels like a lot of those leverage shorts have liquidated over the weekend or just closed their positions going into the weekend, and it's not as heavily shorted. Although you can see over here right around 98,000, there's a $1.2 billion position leverage short. That's a pretty big spot. So, that's going to be an overhead ceiling, if you will, for price if it starts to rally. So my rally in Bitcoin may start a short squeeze. You never know. This is, again, why I like looking at this chart. CoinGlass does some really good metrics, but just look to the left of that vertical line, the dashed vertical line at 95,060. There's not a lot of leverage here. I mean, it's minimal leverage and just really small stuff. There's really nobody's buying Bitcoin at this moment based off of what we're seeing on the leverage side of things. It's really, this landslide right between 99,000 and 97,000. There's huge amounts of leverage short positions. We're talking billions upon billions of dollars worth of leverage shorts. That's another reason why this thing will probably continue down. Now, to be fair, remember when you have this sort of massive leverage positions, it's really easy to manipulate the market. And I mean, really easy to manipulate the market. For most of us, we don't have, $100 million. But if I have $100 million and I go to a DeFi site and I use 100 to 1 leverage, now, all of a sudden, with that $100 million, I have $10 billion worth of power to move the market. So in principle, all I have to do is take my $100 million, short, 100 leverage long, at the money, Bitcoin. And what that will do is it'll cause a cascade of force price down. And once that price starts to move down, all of these people here who are leveraged long, you can see all these colors to the left of that line, they will instantly be liquidated because all it has to do is go to that price, automatic liquidated per smart contracts. So these people will be liquidated, which will cause more selling, and this thing could cascade very quickly, which is why we start to see big candles like the last couple days. This has been a lot of liquidations of leveraged long positions. Now, at some point, if I'm smart with my money, in that example where I have $100 million, now leverage 100x to 10 billion, I know I'm causing the cascade. I know I'm causing the forced liquidations. And then what I can do is I can jump back in and be a buyer as this thing is falling. And I can go back in there with that other $50 million, leverage long at 100x, which is 5 billion, and rip that thing up, because a lot of people are going to start to ride the coattails of those leverage shorts. You can see them all through here. This isn't one individual who's leveraged 100 to 1 short. So if I can rip that back up, I think you guys can imagine that if I could force liquidate this $1 billion position right here, you could see Bitcoin at 103, 105 in no time, right? Once you liquidate these guys who are all leveraged short. So there's this game of tug and war that goes on with the big players in this space. I expect that to continue. It's going to be this ebb and flow, no pun intended, big ebb, but it will be an ebb and flow with these big market manipulators. I don't use any of the 101 leverage. I have no interest in that, but there are people who are certainly manipulating that game. I don't see that changing. I think what will happen is over the course of time, I expect Bitcoin to move up at an angle like this. I have a 45-degree angle here. The volatility along the way, I think, is going to become much more exaggerated over the next 3 to 6 months as more manipulation comes into the market. Let's said, you said you would not sell your Bitcoin even with the 4-year cycle, but if you were going to sell, at what price would you say it's time to sell? 107 was the number for me. We go back to the chart here. Because I've been thinking for years the 4-year cycle is going to happen, right? Right, Les? I've been talking about that 4-year cycle for years now. And what I'm concerned about would be when it starts to make a new low, getting close to November. So really, for me, the liquidation price would have been 107. At the latest, it's 100. But yeah, certainly for me, it would have been the 107 mark, which we had mapped out here. And that's when I did the show saying trouble for Bitcoin ahead. Yeah, 10,000 to go. Yeah, hey, I apologize. I don't want to sound like an after-the-fact trader, but I have been saying that 107 is that point where we really got to go, oh, shoot, this is now making some new lows. And I said, if your 107 isn't your trigger point, then 100 better be your trigger point. Joe, good to see you. V. Gates. My problem is I've got some huge gains and would have huge capital gains to pay. Is it worth liquidating or just ride it out, shooting to liquidate now in 2030? Joe, you may have missed a couple shows because literally that was my conversation that I've had with myself and I've had with this audience. And the reason for that is, just like you, I have massive capital gains hits. And maybe down the road, there is some provision in the tax code that says no capital gains or smaller capital gains. Either way, it's long-term capital gains for me, but I'm still going to have massive hits on my crypto. Not only that, but for me, it's actually the selling part of it. When you go to these exchanges like Coinbase or Kraken or Binance, where you typically would convert that back into a stable coin or go back into US dollars or whatever your native currency is, those transaction fees are colossal. Colossal, right? Gone are the days of $9.95 transactions no matter what you do. For me, if I was to sell, let's say, $1 million worth of Bitcoin, I'm going to be paying at minimum, the cheapest is $12,000 to sell it. That's just way too much. I couldn't do it. And I'm with Big Ab. I'm with you, Joe. I think 2030 is going to be that next time. Remember, we have the halving in 2028. So technically, the 4-year cycle should end in 2029. So maybe we go 2029. But I have a feeling I'm going to ride it out even longer than that. If we get adoption, as I feel is happening more and more, I think Bitcoin will be much higher. And, you just have to ride out these things. Mike says, what do you think of BMNR? When you get into crypto, there's really, in my opinion, 3 ways you trade it, right? Number 1 is you buy the spot physical crypto. So if you like BMNR, that means that you like Ethereum, then just buy ETH, right? Go onto Coinbase, Kraken, Binance, wherever, find your cheapest transaction cost, buy some Ethereum. Just buy it, move it onto your cold storage device like your Ledger, call it a day and leave it alone. That's choice number 1 and my preferred choice. Choice number 2 is you use derivatives markets, like you're using futures contracts, right? So if you liked ETH because you like BMNR, then you probably would want to buy ETH-A, which I can bring up here. So here's ETH-A. That's the ETF from BlackRock. It's got plenty of liquidity right now. It's trading, 56 million shares traded today. So plenty of liquidity, very low transaction cost, and it does actually own Ethereum on the back end in an audited portfolio. So that's the easiest way. Jose, I do trade the ETFs. So when I'm feeling like day trading crypto, I'm only going to trade the ETFs because I don't pay commissions here. Now, if you go to Coinbase, I've shown you guys this before. Let's just go to, if I go to Coinbase and you try to trade there with their futures markets, it's expensive, right? So here's the derivative side of things. Let's go into something like the perpetual futures here. You'll pay decent money to use their futures products. Now, it's certainly cheaper than trading spot. So if you're going to be an active trader, let me just put it on camera here. If you're an active day trader, never trade spot crypto. Too expensive. Way too. You'll spend so much money in transaction costs, it'll blow your mind. Trade the future side of things. So number one is trade the spot market or invest in the spot market, own your crypto. Number two is derivatives. Go to the futures or maybe options on futures. If you want to use options on IBIT, great, or on ETH, go for it. The third one would be to use things like treasuries. I am not a fan of the treasuries. I believe that they are a house of cards. I believe it's a dangerous proposition. Are there some benefits to these treasuries? Sure. I have a whole list of some down here. So here's BMNR, which you asked about. BMNR is an Ethereum treasury, and I'm okay with that. However, you're buying BMNR because you believe that BMNR is going to buy Ethereum, issue debt, buy more Ethereum, drive the price of their share price up, buy more Ethereum, issue more debt, rinse, wash, and repeat, and hello, now we're at the Michael Saylor model. The issue is you don't know anything about operations, how much they're paying all the people, what there's so many metrics of running this business that there's bleed. Meaning you're literally losing money from keeping all these employees there. Why not just buy Ethereum, right? It's way easier. Steven says, I just use ETH and IBIT. It's easy and dirt cheap. Exactly. Here, I'm subject to, are they doing the right things with their Ethereum? Is it a good management team? Are they paying way too much in salaries? Do they have too much overhead? All these variables that you have to analyze. I personally am not a fan of these. Now, I, of course, have been trading MicroStrategy for a long time. I'm out. I got at 315, so that luckily is done. But I believe this is also a house of cards, right? This could come crashing down. I mean, right now, MicroStrategy is down over 50% from its peak here just a couple months ago. Let's go back to its peak from July 16th to where we closed at today. MicroStrategy is down 56%. Bitcoin's not down 56%, right? That is just because this is a leveraged speculative investment, and a lot of these treasuries are going to do very good in a bullish market. But now when we have Bitcoin kind of rolling over a little bit, a lot on Bitcoin on top of this so you can kind of see. Let's go, actually, I'm just going to add IBIT. So this is Bitcoin ETF on top of it. Notice the difference here. I mean, let's go to the beginning of 2025. So there's the beginning of 2025. From the beginning of 2025, Bitcoin is down about 4.8%. MicroStrategy is down 41%, right? This is dangerous stuff. You're dealing with something that sounds great because, oh, they're buying Bitcoin, they're issuing debt. But remember, when you issue debt, you have to make those debt payments. And if they don't make those debt payments, there's default. And how do they fix that? They sell their Bitcoin. My concern here will be that in the near future, MicroStrategy may have to start selling some of its Bitcoin to cover its debt obligations. You can imagine what would happen if the news was releasing that Michael Saylor is now selling Bitcoin to cover debt. That would cause more liquidation out in the marketplace. So, yeah, Steven says, wow, MicroStrategy is in real trouble. Yeah, they look like garbage right now. Yeah, and that's why I love doing those comparisons, Mike. I love looking at comparisons of one asset versus another. The blue is, of course, Bitcoin's price chart, which this is IBIT, but it's going to move the same percentage. It has a slightly lower return than the actual Bitcoin because of the 0.25% transaction costs, right? That's what the ETF charges. But MicroStrategy, my goodness, this is a bloodbath. And at some point, BMNR may actually be a good buy. But until Ethereum turns around and crypto stops falling, I wouldn't touch any of these. I wouldn't touch ETH. Let's get the overlay out of here. These are all treasuries that are either in Ethereum, Bitcoin, Solana, or WorldCoin. Those are the main ones here. Look at Orbs. I mean, where's Michael? Is Michael here? This is a Michael chart. I love picking on Michael. SBET. Same thing. I mean, you don't want to buy these, right? I know that a lot of people here are like, well, it's going to come back. Yeah, it might, right? It might. Oh, Canola says, Merlin, why don't you talk about GBTC? Why? Why would you talk about GBTC? It's garbage. It's trash. Here's the comparison, Okanola, and I'm so glad you asked that. If I have, do I have anything here? Ooh, here we go. Because I'm a dork and I drink Premier Protein, right? These are protein shakes. Hold on a second. Hold up. Okay. Do you guys see I've got 2 protein shakes? I got Premier Protein on the left, Premier Protein on the right. This is the exact same product. If I told you that the one in my right hand is worth $2 and you can buy it for $2, but the one in my left hand is $3, which one are you going to buy? Remember, same ingredients, same product, same label. It's identical product, but one is $2, one is $3. Which one are you going to buy? If anybody says the one in my left hand, switch to a different channel. You're throwing away money. You're going for the cheapest one. Look at the fee structure here. This is an absolute no-brainer. Let's look at IBIT. Here's IBIT. Right? So here's IBIT. We can go out to, I think it's analysis. And you can see here, expense ratio, 0.25%. So that's 1/4 of 1%. All right. Now let's go to GBTC and go to the same thing. The charts look the same, right? We click analysis. Ooh, they dropped. They used to be 2.5%. 2.5%. But now it's 1.5%. What that means is in those 2 products, side by side, identical components, you're paying 1.25% more. Why would you do that? It doesn't make sense. Don't use GBTC. Switch over to IBIT. Never use GBTC ever again. There's no reason to do it. Sorry. Sell that one and buy IBIT. You'll save yourself 1.25%. You can imagine if you have a $100,000 position in that starts to add up to some real money. So there you go, Okanola. That's why I never talk about GBTC. And you hear me talk about it all the time. I'm saying if you want to trade Bitcoin, you trade IBIT. It's the cheapest one out there with the most liquidity. You want to trade Ethereum, then you trade ETH-A because it also has the most liquidity. It's backed by BlackRock and cheap fees. Done. Remember when this first came out, God, it's like a couple years ago, we got all those Bitcoin ETFs. We got 11 approved in one day. I made a table and I said, most of these are going to disappear in a couple years. So within a year, we'll probably see half of them no one's going to use them anymore. And GBTC was high on that list. GBTC was one of the originals to market. But when you look, they were 2.5% transaction fee. And the sad part is the average person does not look at this. They have no idea. That's not good. This is, so that begs the question, why did you buy the $3 protein drink? I didn't buy the $3 protein drink. Here's what a goober I am, Liz. I am always looking for the deals. For example, starting next week, Costco has some protein shakes that are going on sale, big sale. I'm loading the boat, right? I'm always going to be loading. I always buy whichever ones are the best value for the best quality. But Premier Protein's not bad. So Steve says, I do own the Fidelity one, and you're paying a little bit more, I believe. What's that? It's Fidelity's what? FBTC? Yeah, so the Fidelity Wise Origin. It's not 0.25. Let's see what that one is. Oh, it is. Okay. So this one's fine. This is totally fine. It's a 0.25 expense ratio. It's the same as the other one. But, you add on volume here. This traded today 8.76 million. That's fine. But if you look at IBIT, you're talking 93 million shares traded today. So from a liquidity perspective, obviously you get a much better deal or a much better liquidity on IBIT, but as long as the transaction costs are the same, as long as they're backed by institutions like Fidelity or BlackRock, that's fine. I have not updated my table. There used to be a table of ETFs that I built when they first came out and had all the fees associated with it. Maybe I should update that one for everybody. Well, we got a whole bunch of people going to, are we going to have to do a protein shake show today? I want my 30 grams of protein, 1 gram of sugar in my shakes. That's my tag. Only whey or plant. No soy boys here. I use whey. I'm a whey protein guy. Sorry. I did not look at the pagan diet, no. When things are on sale at Costco, the item will have a green. Did not know that. So delete BMNR, MicroStrategy from the watch list. I keep them on my watch list, Dan, because people ask about them all the time. Remember, what's your job as a trader? And you're going to tell me to make money? No. It's not. Your job as a trader is a risk manager, right? Would you agree with that? I'm pretty sure everybody here understands risk management is paramount. So when you look at it something like a MicroStrategy or a BMNR, these are all the rage right now. They're super popular because, ooh, it's a Bitcoin treasury. It'll do what MicroStrategy did. And Dan says not lose money, which is a risk manager, right? You're just saying it with different words. But yeah, absolutely, not losing money is the key. Well, when you look at something like a MicroStrategy, I hate to say it, but your probability of losing money goes up because there's so many unknowns. I mean, you guys realize that MicroStrategy has 5 products that they sell. 5 products. They've got MicroStrategy, they've got Stride, Strike, Stripe, and Strand. There's 4 bond products that they're issuing. Actually, not bond products. Let me take that back. For example, you can buy. I think STRK is a bond product. Is a preferred shares that is 8%. So this one here will pay you 8% annually forever, or until they go bankrupt. Right? That's the irony there. So this one pays 8% forever. And then if you look at Stride, which is STRD, this one pays you 10% forever. That's a lot of financial obligation, especially when you think about the average rate of return for the S&P 500 is between 8 and 10% per year. These guys are beating that, and they're guaranteeing it. The only risk is if they go under, you are in trouble. And so I'm concerned, legitimately concerned, that MicroStrategy has put themselves in a position where they now have all of these very large financial obligations to the community. Remember, bondholders and preferred holders get paid first. The regular shareholders always get paid last, which means if MicroStrategy goes bankrupt and you own MSTR, you're going to be the last one to get paid out, right? STRK will get paid first, Strike, Stretch, all those will get paid first before you. So it just... I don't know, audience, those who've watched me for years now, how long have I been saying this? It's got to be at least 6 months or a year where I've been saying MicroStrategy concerns me because of the fractional reserve lending, because of where they mysteriously keep all their shares or their Bitcoin. I don't believe they actually have all the Bitcoin they say they have. To me, this is the black swan that could cripple the markets. But definitely been talking about this for quite some time. And now those chickens are coming home to roost. The lower this sinks, guys, the more danger MicroStrategy's in. Remember, they're using their share price to pay dividends. And if Bitcoin keeps falling, from my understanding, last time I checked, their liquidation price is right around $67,000. So if it gets down below $67,000, they could be forced to liquidate to pay those preferred shares. And then all of a sudden, all hell breaks loose. So let's hope that doesn't happen. Let's hope that I'm wrong, because if MicroStrategy does turn out to be a house of cards and all kinds of shenanigans going on behind the scenes of lies, then it damages the whole reputation of cryptocurrency. It damages, obviously, MicroStrategy, which could be a systemic risk for the stock market as well. So let's hope it doesn't happen. But I hate to say it, and Oliver's going to jump on me for it right away. We are long overdue for a significant crash in the market. Just saying. All right, what do I got here? Well, wasn't one of their bond offerings recently completed in Europe? Where next they'll run out of options. I'm not sure if the bond offering was done in Europe, but they are going to start to run out of choices here, right? They don't have. Remember, they raised $40 billion to buy Bitcoin, but now where are they going to get their money from, right? It's starting to get a little bit thin, and they're still buying Bitcoin, but now you're buying at the top. When they were buying back at 15, 16, 20, 30, 40, 50,000, great. But now they're buying 110, 111,000. That's problematic. Now they're underwater. AY says, I've been buying Bitcoin for years, but is there something that would make you pessimistic about it or change your opinion? AY, for me, it all depends on what your goal and objective is, right? I believe, and this is just my 2 cents, this is not financial advice, you guys take it for what it's worth, but I believe that these crypto projects, Ethereum, Solana, Cardano, Avalanche, Algorand, Bitcoin, are going to be the infrastructure for the entire financial system going forward. And if it's not specifically those, it will be projects built on top of those projects. So for me, I look at this entire financial system that we deal with, which is, you name it. Name anything to do with money, whether it's a bank, an insurance company, a mortgage company, a title company that's keeping titles for homes. That'll all be tokenized. It'll all be digitized. So for me, I have that long-term perspective. My crypto portfolio, I'm not worried about these fluctuations. You know, am I irritated that Bitcoin's down 20%? Yeah, sure. But I'm not losing sleep over it, right? Because I'm thinking at least 2030. I know some of the audience members here are looking at 2030. I might even be longer than that. But by the time we get to 2030 or 2040, these payment rail systems, this financial service industry will be completely built on top of this stuff, and I'm no longer worried about it, right? Because they will be now adopted, and the share price or a coin price of all the pieces that I'm in will be much, much higher than it is today. So I don't worry about that so much. But if you're a short-term trader, for AA out there, if you're short-term and you're worried that you're going to hold it for like the next 3 months, you should be concerned. Honestly, if you're going to be like a trader that's just looking for like the next 3 to 6 months, you should be out of Bitcoin. You should be out, right? You should wait for this market to stop selling off. Right now, this chart is saying we're going lower. Not only are we breaking short-term lows here, we're breaking intermediate-term lows, and if we get down here 76 and break that, then look out below. And let's hope it doesn't happen. Yeah, exactly. If you're short-term, be short, 100%, without question. Okay, well, that was the worst performer. We just spent a good 27 minutes on one topic. Let's go to gold here, which is down 2.39%. Nothing really that important here from a trend perspective. It was I'm waiting to buy more. Yeah, there you go. Me as well, right? If we get down to the 67,000, I'll probably buy some more. Happy to do so. All right, so gold, we had a pretty significant sell-off today for gold, but really it's still in an uptrend. Everything is okay. The only negative part, which we talked about in yesterday's show, was that we didn't get back to an all-time high on this most recent rally, but that's okay. We still are trending higher. S&P 500, unchanged on the day, but I put in the show notes that I do like the way that we closed, right? Look at last Friday. Last Friday was this giant hammer formation. We ended up getting positive news over the weekend. Markets rallied for the first 3 days of the week. And look how we finished today. We finished with almost an identical pattern. Granted, it's not quite a hammer formation because there's a topping tail above it. But this does lead me to believe that we're going to have a similar situation, which will be a positive day on Monday. So for this reason, I actually kept my position. So you guys know I have CRWV, which is getting just murdered. Brutal day. So I got extra. I'll be exercised. Let me just put this in here. Modify my numbers. 85 was my entry price. I collected $1.51, so I should put my average price, but that's what my exercise price will be. So essentially, I'm down on that one $7.09. You take out $1.50, which means I'm down $6 and 48 cents. So I'm down $6.48 per share on this bad boy. Not good. Come Monday morning, if we get a nice little gap up, I'll be selling calls right around $85 for the week, and we'll see how that one pans out. But this was really a game time decision for me. As I saw the markets bounce and rally back up, I was like, oh, maybe I'll hold it, and I did. So there we go. Price action was speeding. It was fast today. I love the way it had that about face, and especially the way we ended. I really had confidence in the market by the way that we close the market. It wasn't just the S&P, right? S&P had this nice pattern, but you look at the NASDAQ here as well, similar pattern, coming off the heels of a very aggressive 2-day sell-off. Buyers came in at the end of the day, and that's important, right? I always talk about trading as a battle between buyers and sellers, and at the end of the day, the buyers pushed this thing all the way back up. Today's candle was a giant red candle, and it came right back and closed where it opened. That's a really positive sign, even though it's a down day, a positive sign. Caesar Merlin, Russell, it's the 2 up. I'll get to the Russell question here in just a second. It's a dollar index. Oh, all right, sorry. So I do expect, based off the 2 patterns you see here for S&P and NASDAQ, which look almost identical, I expect positive moves at the first part of next week. All right, dollar index. Man, beautiful. Just came up into that 100 supply zone we talked about. We did the spinning top of the yellow box. If you were short on this one, you're still short, and it's still drifting lower. Great. But the question becomes, how low is it going to go? I would say, let me get rid of this yellow box here. I would say your target for this bad boy is going to be right here, which is between 98.75 and 98.56. So it's a very tight range, but that seems to me like where we'll come back down to for a retest on this one. Let's see if it happens. All right, back to the Russell, which Steve, it says, Merlin, Russell broke its critical low swing low. It did crawl back above it, but does the Russell usually lead the equities down? kind of forecasting? Usually it does, right? So the Russell, at least from my perspective, and again, different strokes for different folks, I've always been a believer that the Russell is kind of that canary in a coal mine. If the Russell's leading the market up, that means that most likely we're going to see more bullish activity going forward for the S&P, NASDAQ, and the Dow. If Russell's crashing, generally that's going to be the alert that, hey, small caps look like they're going to suffer going forward. That means the rest of it's going to fall down. Now, what we have going on right now is very unique. You have these relationships where if you have a weak dollar, the equity market should rally. If you have a strong dollar, gold should sell off. These relationships are almost hardwired into the market. And while they're not 100% of the time, I would say a high probability percentage of the time, they do work. It's well over 50%. Probably going to get that 60, 70% mark of correlation. Now, I'll tell you guys, it feels like they are all broken. Those relationships of correlation seem to me completely irrelevant right now, and that has me concerned. It's just like when all the traditional things we look to help forecast and anticipate which way prices are going to go, when none of those work anymore, you kind of got to back off and say, okay, something's broken. As I used the quote from yesterday from John Maynard Keynes, the markets can remain irrational longer than you can remain solvent. And a good example would be, here's your dollar index. So we've seen the dollar index sell off aggressively over the past few days, right? This may not seem like a lot, but having a 1.1% slide in the purchasing power of the US dollar in 7 days, that's big, right? That's a big number. Based off that, you would think that you're going to see the S&P surging and gold surging because the dollar's getting cheaper. Well, gold did actually surge a little bit, but gave it back today. S&P, nope, opposite direction. So yeah, it's as Steve says, everything is moving on its own, kind of alarming. Absolutely. Now, what we do know is at some point this will all revert back to normal, right? Yeah. When things get out of whack, generally it reverts back to normal and everything is okay. But for now, you kind of just have to, ride out this oddity. And I would argue that for anybody who is using these historical relationships, the best thing to do is to scale your bets back. Don't trade as heavy until things get back to normal. It's kind of like the ocean out here in California. Everything's fine in the ocean until something happens, and they'll alert you and say, oh, it's a red tide or it's got strong rip currents. Stay out. Just stay out of the water. Just be very careful when those situations happen because they can be hazardous to you. Same thing here. I have found over the past couple weeks that my trading has not been as good. I'm certainly not as consistent as I have been, and that's frustrating. But I think it has a lot to do with a general disconnect of all the historical relationships between price, between dollar, between bonds. It's very odd. And unfortunately, that just happens every now and again, and it will go back to normal. Dan says, because it's all up or all down. Yeah, right. That's what's confusing. There's usually some inverse, right? A hedge you could use, go to the dollar or bonds to hedge things, and it's just not there anymore. It's really bad. Listen, Merlin, what's your take on the primary reason for this week's move? December rate cut concerns, AI bubble, lack of government data. I think that all three of those end up being a big factor to it. So number one is I think that we're just long in the tooth in the market, and I think that there's some profit taking coming in. I think that's probably the most important piece. Number two is uncertainty about what the Fed's going to do, which is why I created that list of all the different voting Fed members so you can kind of see where we stand. Let's go bring up the current chart. The odds did increase today of a rate cut, right? It increased a little bit, but yesterday we were literally a 50-50 coin toss. Today, here you go. Oh, shoot. Man, well, maybe this is why the market's saying, I didn't see it shifted like this. Right now, there's a 50% chance, 54% chance that rates stay the same. That's new. And I know it's hard to read here at the bottom, but again, a month ago, on October 14th, it was 94% chance of a rate cut. A week ago, it was 67% chance. Yesterday was 51%, and now 45. So it's shifting very quickly. I did not know we dropped below 50% chance of a rate cut. That's not good. I mean, basically the market is reacting to the fact that the Fed is probably not going to cut rates, which means they're not going to juice the economy, which means money isn't as cheap, and that's the reaction we're going to get. Look, I still believe the Fed is going to cut rates. Just listening to the talk track from all the voting members, it just seems like the right thing to do. But again, data dependent, right? We are going to miss the numbers for October. For a lot of data, we're not going to see that stuff. But remember, the FOMC meeting is December 10th. So that first week of first week of December, we will get all of the November data. So we're still going to get to see data. These people are freaking out about data. I'm kind of just going, what? Nah. Doesn't mean you're probably, which one, Andrea? Yeah, that is quite a change, right, Tiger? Let me look at that one just a second, Manava. So, Liz, I think now it actually makes more sense because people are going, oh, the Fed's not going to cut rates. Well, the party's over. Then I look at the AI thing, and as I mentioned, I think that the OpenAI thing's going to turn into a real fiasco going forward. Maybe not now, but I think if you go 6 months, a year out, that'll be front page that OpenAI is, one of the big reasons why the market crashed. It caused people to have this overinflated expectations of AI and growth, and the numbers just didn't make sense. They're way too elevated, but I could be completely wrong there. Technician JD says, death cross, 50 cross 200 downwards, last 3 on Bitcoin have signaled the bottom. Thoughts? I usually don't use a, let me bring it up here. Let's add on both those moving averages. So there's a simple moving average, another simple moving average. We've got 2 of them on there. Let's add the 50 and the 200. And let's change those colors here. We'll make one of them red. There we go. Okay, there's red, and then let's go the 50 on this bad boy. I do like looking at this. I'm not a big fan of putting indicators on my charts, but the reason that it's good to look at this stuff is so many people are looking at different moving averages and trying to figure out what it means, and they react to those changes. So let's go to Bitcoin here. So you don't quite have a death cross yet. If this is the 50 and the 200, you can see the red moving average here is flatlining going down. The 50 is way up here at the top. Technically, when the 50 crosses below the 200, that's when you should be out of your position. But dude, if you're waiting that long, you are so late to the party. So late to the party. Yeah, it's real bad. I mean, by the time this 50 crosses the 200, we could be down at 60,000. That's why these are such lagging indicators. Moving averages are extremely lagging indicators. Not good at all. Oh, Lady Andrea says about the rate cuts. Well, I'm going to win the bet with the rate cuts with Bill Addis, but I'm going to lose here with Big M. I already lost with Big M. I didn't. The right thing, in my opinion, is not to cut rates this year. Or they could have cut it one time, fine, just to appease Trump, but they shouldn't do it 3 times. Now they've opened that door, and they got to keep on doing it. Steven says, I'll be buying when they cross. Probably not a bad idea. Now, I wouldn't do it arbitrarily, right, Steve? If we get this 50 crossing below the 20, right? Let's just kind of hypothetically zoom way out here, right? That could be sometime. Look, judging by if we get a big sell-off here, that could be sometime in December, right? My cursor is kind of forecasting where that might be. If that happens, we could literally be at the 75,000 mark, which would be a great point. And don't buy just because they're crossing. But if you see it coming into a strong demand zone or a point that you like, then yeah, absolutely. Under the 200 period moving average is usually not a bullish sign. Absolutely, it's a very bearish sign. And right now, Bitcoin is under its 50, the 20, the 200, the 40. It's under all of them. But do you need moving averages to know that Bitcoin is in bad shape right now? No, none of us do. We can just look at the price chart. We know that the more important part here is not that the moving averages are pointing down. The more important part is it's been making new lows. So lower lows, lower highs. There we go. All right, what was the question there? RNJ, love it. He says, thoughts on Warren Buffett buying $4 billion worth of Google? Let's be honest, it's not Warren Buffett, it's Berkshire Hathaway. Warren Buffett is no longer part of the day-to-day operation, so it's the other members there. But we still have this legacy where we keep Warren Buffett on the payroll, right? It is interesting because, yes, not only is he buying Google, or buying parts of Google, which should be a really big boost, but he's also selling his Apple. Oh, that's an interesting one. Let's look at if you go to a website here, it's called Guru Focus. I'll show you. Here's Google. So basically, his new position here in Alphabet is $4 billion worth. He bought, it's 1.6% of his portfolio, so not that much, right? Bit smaller, but that's his new position. But look what's going on with Apple. So he basically he sold 14.92% of his shares of Apple. That's also kind of interesting, right? Because remember, Berkshire Hathaway was never really a big tech company. They always went to more consumer staples like Kraft Heinz and Coca-Cola and and what's that? Dairy Queen, right? Those are the companies you would buy outright. So it is interesting to see them migrate more to tech, and maybe that's just a changing of the guard. Once you got Charlie Munger out of there and Warren Buffett out of there, some of the younger people going, hey, Apple, Google, these are pretty good companies. I hope they don't lose sight of what made them the great company that they are, right? That makes me a little nervous that they're now going more tech, but I think it speaks volumes to Google's dominance. Does Apple have AI? No. Apple they do, but they're using other people's AI. Yeah, there you go, See's Candy. Man, I hate See's Candy. My teeth hurt just saying See's Candy. And the only time I drink Coca-Cola now, especially now that I've been on my health kick, is like if I have a whiskey and Coke, I have a Crown and Coke. I'm a believer. I'm not gonna do the sign language for you, but if I ever meet someone at a bar, like I've done this many times, I will tell them, like, I'll buy you guys a drink, but you can't communicate verbally with their bartender. I'll buy you a drink, but you have to sign language your drink. So my drink has always been Crown and Coke. So I'll leave it to your imagination what the sign language is for that one. If we go have a drink, I'll show you what it is. But yeah, you got to sign language your drink. Big Ed, when we go to have dinner, you're gonna have to sign language your drink, and I owe you dinner anyway. So actually, that's true. I owe you dinner. We didn't say anything about drinks, so you have to sign language for your drinks when we get there. Didn't they buy Reality Executives as well? That I don't know, Steve. I don't know about that one. All right, I'm going to keep on moving up the list here as I've digressed into just bizarre conversations. Now we're talking about ordering drinks at a bar without using your mouth. Okay, all right. Let's go to, we passed the dollar index. We got to the Russell 2000, which I agree. I do think that this is concerning because it didn't break down, or it broke below that 2381, which we talked about, but it didn't close below it, right? For me, a close is critical. And whether you're using a daily, I know some of you would like to see the weekly candle close below. Even the weekly didn't close below those levels. So it's still okay, but it is concerning because it's back down at those lows that we saw from October. So that's not good. The 10-year yield starting to creep back up again. Remember, Bill Lattice has been pretty adamant that he believes this is going to go much higher. I've been saying the trend is your friend till the bend at the end. We've been making lower highs. Once we get above 4.2% on that 10-year, then all of a sudden, I think you're right for Bill. We're going to see the 10-year move higher and higher and higher and higher. Let's just touch the front top of your head and your nostrils. What are you talking about? Did I touch my nostrils? Where are you going with that one, Les? And then lastly, we had crude oil here. Oh, I got it. Yeah. There, yes. I see. You're trying to explain my drink. Yeah. I could say some real off-color stuff. We'll keep it PG today. So yes, you're pretty close. You're pretty darn close there. Actually, when we had a drink at the resort in Orlando, was it Orlando? It was Orlando. Yeah, Money Show in Orlando. I ordered a Crown and Coke, but I should have sign language it for you. Maybe I did. I think you were there when I did that one. Anyway, last one, crude oil. From a technical perspective, look, again, this looks like a Michael chart. Lower highs, lower lows. If anything with crude oil right now, it's about looking to short this thing as it goes lower. But right now, you're stuck between those two yellow boxes on the screen. That's going to be between the most recent pivot, which is right around $62, and your bottom of that lower demand zone is going to be right around $56. So it's just kind of bouncing back and forth in between those zones. Nothing really that interesting for me. The only other part I wanted to get to is looking at some of these Magnificent Seven stocks, which we kind of did. Amazon. Amazon had a little bit of hesitation. I mentioned that there's a good possibility that Amazon could actually get down to 222, at which point I will be buying. I would be buying some Amazon. Memon says ordering a sex on the beach could get you arrested. Yeah, you might get in trouble. We might get in trouble. Thank you, Chio. Yeah, if you guys like today's show, hit that like button. If you don't like the show, that's great too. You can just email me at tradeandmerlin@gmail.com and tell me why you didn't like today's show, and I'll happily make some changes. There was a comment. It was the first one that came through today. I don't know if you're still here, Mustafa. Mustafa, are you still here? He said, hello, dear. We're that kind of relationship, huh? He says, can you let me know your opinion on Webull stock? I am kind of deep in the red. Mustafa, I don't know if you want to hear my opinion on this one. So let's go look at Bull. I mean, if you look at this chart right here, everybody in the room right now knows what I'm going to say. There's not one person in the room who is going, God, I wonder what Merlin's going to say here. You all know exactly what I'm going to say. Where was your stop loss on this one, Mustafa? You said you're deep in the red, and I get it. I get that you like Webull. You probably bought Webull because you go, oh, it's going to be the next Robinhood, and it's going to be moving to the upside. Look, this is bad. It's lower lows, lower highs. The trend is your friend till the bend at the end. Man, if you haven't learned anything from this show, you should know that. And right now the trend is so bad for Webull. I got to ask you, where was your stop loss? Why didn't you get out when it broke 1050? Why didn't you get out when it broke 11 or 1250, right? There's key levels it broke where you just should have said, I'm out. Now, what you don't want to do here, Mustafa, is you don't want to add to this losing position. I know what you're thinking. Trust me, I have been there countless times in my early days as a trader. You're like, okay, I bought it at 15, it's at 8. If I just buy more now, it doesn't have to go up as far for me to balance out. You don't know what's going on with Webull. For price of Webull to fall from $18 down to $8 just in the last 6 months, something's wrong with Webull. I don't know exactly what that is, but it's not a pretty picture. Will Webull survive? Possibly. It could very well turn the corner. I mean, hell, we talked about this with Robinhood, right? Robinhood had the same basic chart, and we were saying that either Robinhood is going to get acquired by somebody or they could potentially be delisted. And all of a sudden, Robinhood reinvented themselves. They went all into digital markets. They're now doing digital tokenization, and they are surging like crazy. That might change here. So the right thing to do would have been to liquidate your position a long time ago. But now, yeah, Argus says the horse is dead, dismount. And you find yourself asking how low can it go? The answer is simple, 0. This can go to 0. If you're stubborn and you don't want to get out of your position because you refuse to take a loss, then I would wait for this thing to start making a new high, right? Yep, Bull is a SPAC. And we know that by looking at its price back here. It started back at $10. All these SPACs start at $10 and then have a huge surge and come crashing back down. Yes, I'm so glad you did that show on SPACs because really I think I nailed it with that show. It's like they can be good, but most of them are going to just crash and burn. Most SPACs are done without, in my opinion, due diligence. And, Webull might be a great company, but the chart is telling us different. So, Mustafa, I'd say either get out and wait for this thing to start proving it's going to go up, but stay away from it. Yeah, this thing it was trash. All right, what's the other one? Someone asked here. Steve says, I've added to losers. Don't do it. Oh, yeah. It hardly ever works out. Everything works out. Architecture says, thoughts on Burry's huge bet against NVIDIA Palantir. Will he have another 2-year drawdown before? He's done. Burry's out. We've been talking about him all week. He's underwater. He lost huge money on that. The trades were made before October, right? They were just talked about last week. So, yeah, it's not a good thing. Burry's done. He's going to go run into the shadows and disappear for a while and probably do his own private trading as opposed to running a hedge fund. So, yeah, he lost big on those. And the moral of the story there with Burry is, again, the markets can remain irrational longer than you can remain solvent. Whatever your opinions are of Palantir, if you were shorting Palantir on this rally up, you just got eviscerated. You just got smoked. So that's why I'm always a big fan of waiting for confirmation. I'd rather leave money on the table and let the market confirm to me that it's actually going in the direction I thought it was going to go in. All right. Steve says NVIDIA may save this market next week or bury it. We will see. Yeah, on Wednesday after market close, guys, we have NVIDIA reporting earnings. That is the most important piece for the week. There's not a lot of big economic data. I think on Friday we have services and manufacturing numbers. Wednesday, I do believe we have the FOMC meeting minutes, which will be interesting to see what the thought track is for some of these FOMC guys. But yeah, it's all about NVIDIA next week. No problem, Tiger. No problem. Yeah, he gone. He done. He delisted his hedge fund. He wrote a letter of really resignation to all his shareholders and passed it on to some other guy. Not good. Not good. And I think the nail in his coffin was shorting Palantir. So this graphic here, Tiger, just so you know, the vertical line represents the end of the quarter for his hedge fund to report. He was already short over $1 billion, or I think it was $900 million of Palantir before that blue line, which tells you that he's underwater. He lost on all of that. Yeah, that'd be his next movie. It's funny because it'll be The Big Short was about real estate, and then it'll be The Big Short 2 on how he blew up his hedge fund, shorting Palantir. That would be pretty funny. Okay, let me go to the economic calendar so you can kind of see what's happening on Monday. Not a lot. Let's go out here. Bam. Just so you guys know, next week I am leaving on Thursday to go to Dallas, Texas. So I will be doing a show Monday, Tuesday, Wednesday, but not Thursday, not Friday. Yeah, we'll see what happens while I'm over there. But Should be a good time. Monday, let's go to the 17th. What do we got cooking? Well, now we're going to start to see some data come out, but still not really scheduling what is coming out. We have the Empire State Manufacturing Index happening on Monday the 17th. You have FOMC member Williams, Jefferson, also Waller will be speaking on Monday, so that will be an important one. You also have the federal budget balance and that type of stuff. But really not an exciting week from that perspective. And then on the earnings front, there's nothing reporting earnings on Monday, so boredom. So that will do it for me. Let's see. Why would you short the strongest stock? Makes no sense. Because people make this statement, Liz, and I'm sure that maybe, Liz, you've said this once or twice. Actually, you guys type in the chat. How many of you have said this in your trading career when you look at a stock? You said this, and I quote, "Oh, this thing cannot go up anymore. It's got to go down." I'm raising my hand because I have absolutely said that many times in my trading career. But I can say that all I want. I'm not going to short it. All right? Steve said it. Yeah, there's sometimes you look at a price chart and you're like, man, it just can't keep going. It will keep going until it doesn't. So you have to wait for it to prove that it's not going up anymore. That's why you guys always hear me talk about that turn at the end, right? When things start to reverse and go back the other way, that's when you finally say, okay, now I'll go short. And we're very close to that type of moment. Well, we are in that moment with Bitcoin. We talk about shorting Bitcoin because it is in fact sold off and broken down below. We have the S&P, the Russell, the NASDAQ, not quite there yet, but they might be in another couple weeks. We don't know. The trend is still strong and up. Anyway, exactly. That's why the markets can remain irrational longer than you can remain solvent quote is just such a great one. Such a good one. All right, guys, that's going to do it for me. Hope you enjoyed it. Hope you had a good week. Do something fun this weekend, so cheers to all of you. It's going to rain all weekend out here in Southern California, so we'll see how that one goes. But I hope you guys have a fantastic weekend. Do something fun. If you like today's show, hit that thumbs up button. If you're brand new, hit that subscribe button or the bell on YouTube. That will alert you to when the show goes live. And I will see everybody on Monday. If you want me to discuss anything next week, email me at tradermerlin@gmail.com. Take care, everybody.